What if I told you you could pay your mortgage off in half the time? Hi, I'm Brad Rice, CEO of Amerifund Home Loans.
And I'm Jamie Cavanaugh, Chief Operating Officer.
Today we're here to talk to you about the 15-year mortgage payment. Many people believe that refinancing only gives you a couple options, and typically people look at a 30-year mortgage as the primary option. For a variety of reasons, somebody may opt to refinance their mortgage, which include things like a cash-out refinance to pay off bills or
debt consolidation, home improvement. But there are so many things that you can do to take advantage of today's low rates. And it's not just about trading one 30-year fixed mortgage for another. Why not take advantage of the low rates and cut your mortgage term in half? Take a 30-year fixed mortgage and make it a 15. Your payment might stay the same, it might go up a little bit, but you could cut your mortgage in half.
We're here to give you an example of what it might look like if you did refinance into a 15-year mortgage. So using an average loan amount of about $450,000, Jamie, we ran some numbers. And those numbers are really astonishing. You're saving about 0.5% in interest rate between a 30 to a 15-year mortgage. That's typical on any given day. So in today's market, we'll use the example of 3.75% interest rate for a 30-year mortgage and 3.25% for a 15-year. Guess what that does? So using a $450,000 loan, what do you think happens at the end of 15 years?
Well, my guess would be if you had a 30-year fixed, you'd probably still owe some money on that mortgage.
That's
About
correct.
How much would you owe, Brad?
It's a lot, Jamie. It's a lot. So let's give you an example. At the end of 15 years, you would owe zero on the 15-year mortgage, where the 30-year mortgage, you still owe $286,573. Isn't that huge?
Would you say that a lot of that is due to the fact that you're still paying so much interest on that longer term?
So much more interest. The interest that you pay on a 30-year mortgage over a 15-year mortgage, given that separation in time, is over $181,000, specifically $181,085 for a $450,000 mortgage between the 15 to the 30-year interest rate. It's a huge savings.
$181,000 in difference in interest between a 30-year fixed and a 15-year fixed mortgage. Brad, what would you do with $181,000?
Well, my goodness, there's so much you can do with it. Let's think about that. Obviously, a college education. So you've got some kids and they want to go to college. How much does that run these days? $30,000 to $60,000 a year, plus living expenses. How about buying a second home?
Big time.
That's a good one. Or a boat. How about a boat? I know today a brand new wakeboard boat costs about $180,000. So that might get you one boat. What would you do, Jamie?
Well, all the things you mentioned, I've got a daughter and there will be college fees coming up here sometime in the future. But, I might also look at buying an investment property. I'd love to build my investment portfolio. It's built-in retirement. The real estate market is one of the best investments that you can ever make. So, I might just take advantage of the fact that not only am I saving on interest, but I no longer have a mortgage payment to make. So why not pick up a rental property?
That is a great opportunity. In fact, if you look at different areas, so not just where we live, that's a little bit more expensive, but you could take that $180,000 and possibly buy 3 properties.
So basically, by having a 30-year fixed mortgage, you are paying close to $200,000 in interest over the life of the loan, as compared to the 15-year mortgage, in which your loan would be paid off in half the time, and you'd be paying $181,000 less in interest. Boy, if there was a way to swing a 15-year mortgage payment while these rates are so low, I'd sure do it.
Look, if you can afford it, it's a huge savings. But let's also put this another way. 15 years is a long period of time. Let's say that I chose to stay with a 30-year mortgage and you chose to stay with a 15-year mortgage. Take a guess at what it would look like, what I would look like at the end of 30 years versus what you would look like at the end of 15.
Are you going to use one of those apps, Brad? Those
I am
aging
going to use
apps?
one of those apps.
Oh boy.
So how many of us have used one of those face apps to see what we'd look like in the future? Comment below and let us know.
Let's see.
But I ran that, and take a look at what I'd look like in 30 years. That's funny.
And lucky me, I chose the 15-year loan. So take a look what I will look like in 15 years.
So it's true. There's a big savings. Because we do this every day, it's pretty easy for us to see these numbers. But what we really wanted to do is make sure that you, the people that are asking the questions, our customers that are asking our questions, really see this. So I want you to see in a graphic style exactly what this looks like once again. 15-year mortgage versus a 30-year mortgage. As you can see here, using $450,000, 3 3/4 versus 3 1/4, the interest that you pay total on the 30-year mortgage is $300,247, where the interest you pay on a 15-year mortgage is only $119,162. At the end of the 15-year period, the 15-year mortgage is paid off, and you're left with a balance on a 30-year mortgage of $286,573. That's a lot.
Let's talk about all the things that you can do when your house is paid off. Some people, a lot of people, especially here in Southern California where home prices are, let's face it, really, really high, we work to pay our mortgage. What would you do if you did not have to write that check to the bank every month? What would you do if you didn't have a mortgage to pay? You could go out and buy a vacation home. You could buy an RV and start to travel. Heck, you might even be able to retire a lot earlier than you had thought you would. There are so many different things that you could do with all of that extra money. And let's not forget, you just got 100% equity in your home. You own it, free and clear. The bank has no stake in your home anymore, and you own every piece of equity in that home. 15-year mortgages really do make a lot of sense for all of the reasons that we've mentioned here. And if you have questions, we welcome you to place those in the comments.
So Jamie, we get this question all the time, and I'd like you to answer this. Is there a specific amount of interest savings that somebody must have to justify moving from a 30-year mortgage into a 15-year mortgage?
Well, that is a great question. There should be at least a small interest savings. Every situation is unique, and that's why it's really important that if you're thinking about a 15-year mortgage, that we go over your individual situation and talk it through with you, run the numbers, and see what really makes sense. Please feel free to give us a call, email us, or go to our website at amerifund.com so that we can talk about your specific loan and whether a 15-year mortgage makes sense for you.
I do want to put it out there. We are going to have more and more of these sessions. And I want to encourage anybody that's watched this to, if you're watching it live, please comment below now. Let us know what other questions you have that you'd like us to address or answer. It doesn't have to be exactly mortgage related. It can be finance related, but we would really love you to comment below and let us know what's burning on your mind. Do you have questions about being a first-time home buyer, affordability? What other questions would you put out there that people could ask?
Well, I'm really excited to hear about what other topics people would like us to cover in some of our future recordings. It's really important that we educate our customers, and it's something that we really both enjoy doing so much. So what would you like to see for our next video? Let us know. And don't forget to visit our website at amerifund.com. And also, feel free to call us anytime, 800-570-5626. That's 800-570-LOAN, LOAN. Thanks again for joining us today. We hope everybody has a fabulous day. And don't forget to give us a call if you have any questions.
Thank you for joining us.